But first things first, as we often do, we like to look at U.S. steel prices relative to where North Europe is in the blue, and then Chinese prices in the orange. All three of them, as you can see, for the last several months have been headed on a downward trajectory. It's very, very hard to see, but on the far right-hand side in the white line, you'll notice there's a very tiny blip higher in the hot roll coil price. That's not a coincidence that perhaps 2 or 3 weeks ago, many of the U.S. steel mills did announce price hikes, roughly in the range of $50 per ton. They were different from mill to mill. Some of them put in a base price right around 900. Some of them said 950. But long story short, they attempted to put in place a little bit of a floor and perhaps even bring prices up. And it does look like we're seeing a little bit of price support as we sit here today. It's early days in seeing how well these price hikes will stick. But I think one other thing worth noting as we look at this chart, even though Chinese prices are at a massive discount to where U.S. prices are, they're almost half at $486, $487 per ton. It does look like ever so slightly those Chinese prices are kind of stabilizing. So maybe the worst is behind us with regards to Chinese steel prices. They make up such a large percentage of the overall steel market. They can sometimes act as a buoy for global steel prices. So we'll have to see in the coming weeks how that chart develops. But for now, it looks like they're seeing several weeks of at least a flattening of prices. And we'll get into some Chinese details here later in the discussion. With steel prices coming down and with mills continuing to ramp up, we are seeing capacity utilization moving higher domestically. Some of that is in the face of slightly higher imports, but I think it's worth noting that this import wave that we thought was maybe going to come in, say, late Q1, Q2, as domestic prices went from $700 to $1,150, $1,200 per hot roll. There was an expectation that maybe imports would start to flood into the market and then quickly correct things. It is worth noting that that import wave, they did creep up, but it wasn't by any means a wave. So I think there was really an opportunity for domestic mills to ramp production and still maintain a little bit of pricing discipline in the last couple of weeks. And I think that's probably one of the legs they have to stand on for why they think they can get a price hike put in. This is probably the biggest. Yeah, go ahead.
Audience jumped in here. I think it's a timely question. They mentioned SDI Sinton down for 2 to 4 weeks due to some equipment issues. Do you think 2+ weeks of steelmaking loss in the South might, in that area, right, will affect pricing for the near term?
I don't know if it'll impact pricing dramatically. I mean, certainly it's another leg to stand on to say that this is why we should see a bottom in prices. I think there are also a lot of difficulties coming out of the AMSA facility, which is down in Mexico. Mm-hmm. A lot of questions about how fast, how big, or even if they will ramp up production. So certainly there are some production matters in the South that are tightening things up incrementally. I don't think that means things need to rip higher. But certainly I would say slowing bleeding to the downside with regards to price.
I guess it all speaks to, right, if something happens, right, so the mill's down for a few weeks, like what does that do to the volatility in the near term? So like it's kind of that subtle balancing act, I guess, if you will, across the mills, right?
For sure. I mean, there is a bit of excess capacity that you can probably go to at other mills in the region. But maybe it just pushes lead times out by a couple weeks, but shouldn't be in a situation where it's enough to really cause things to fully tighten up and cause a panic or anything like that.
Sure.
Well, what's most interesting, and I will say this does not typically happen in the steel futures curve, but I found this to be a very interesting phenomenon, and I spend a lot of my time on the risk management side dealing in the hot roll futures market. So this is a bit of a head scratcher, but if we look at the hot roll futures curve, basically at present, we have this phenomenon where, and we're going left to right as we look forward in time. So the first contract is going to be the July futures contract. The next point out on that orange curve is going to be the August futures contract. And then obviously the third one I have circled is going to be September. And you've got this phenomenon where there is an upward move, but it's not an upward move that extends really far out in the futures curve, which is what you would typically see if there's an expectation that the price hikes were going to be, sticking and substantiated for a longer period of time. We have this phenomenon where the market is essentially saying, yeah, we think price hikes are going to stick for a month, maybe 2 months, but then it's going to be right back to where we were as we looked at this a month ago. And maybe even as we look out here into like November, December, there's even a suggestion that by November, December, maybe it's even worse by the time we get to that point in time. So pretty peculiar phenomenon. It's definitely a situation, and you alluded to it at the very onset, which is a lot of people in the market are trying to weigh these price hikes in the face of what looks like a somewhat consistent slowing in manufacturing activity across the world. It's not, sky is falling across the world, but certainly some pockets of weakness in the manufacturing space, I think, is being weighed against the fact that, as you mentioned, SDI being down but for a couple of weeks, the mills announcing price hikes and thinking that they can get those to stick for a bit. The market's basically saying, yeah, they'll stick for a little bit, but then it'll be right back to business as usual. We'll see our normal seasonal softness as we get into Q4. So pretty interesting phenomenon right now. Definitely a bit of a tug of war within the steel sheet market right now.